This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping our show on Thursday, December 14th at 8 a.m. It's 2017, 11 days until Santa comes, and happy Hanukkah to the Jewish community, the Festival of Lights. I know that because of Adam Sandler. Thank you, Adam. U.S. dollar, 93.39. Canadian dollar, 77.88. Gold at 12.59.20. Silver, 16.18. Gold-silver ratio is 78.79. Platinum is at 8.93. Palladium, 1,020. WTI, 56.15. Brent, 62.12. Nat gas is 269. Bitcoin in U.S. dollars, it is 16,770.71. It was over 17,000 during the week. Bitcoin in Canadian dollars, 21,725.23. And we do have it in our free weekly newsletter. You can get our newsletter from Harold by calling us at 1-800-432-1022 or sign up by going to the website rarecoloreddiamonds.com. A story about 40% of Bitcoin is held by 1,000 people. You heard right. 1,000 people have control of 40% of Bitcoin. And Harold, the Bitcoin story was strong again this week as well in the United States. The Fed did raise interest rates. And this is the last time that Janet Yellen will give a press conference, as Powell is going to be taking over from her as the new head of the Federal Reserve. But breaking news as we start today's show, speculation is over. Walt Disney has struck a blockbuster agreement to buy almost all of 21st Century Fox for $52.4 billion. Rupert Murdoch selling out to the people over at Disney. The takeout brings together some of the biggest brands in the entertainment industry and puts Netflix on notice that Disney is ready to battle in the streaming wars. And Harold, I don't know about you, I'm looking forward to seeing the new Star Wars movie here starting, I guess it is tomorrow. It comes out in movie theaters.
You better believe it. It's a blockbuster. Everybody's already buying tickets for it, so it should be very, very exciting. You know, the Bitcoin thing is really unbelievable. It's not something that I partake in. It's way too speculative and way too risky. But again, the climb in Bitcoin has been astronomical. I mean, from when it first came out at just a couple dollars to be trading at 14,000 is really an unbelievable thing. Again, word of caution. Don't chase after that market unless you are a heavy speculator, because again, you know, as much as that market goes up is as much as it can go down, and now they're starting to trade it in the futures market, is going to bring speculators and hedgers together, and again, you're going to see a very, very volatile market. So if you're a big speculator, you know, Bitcoin should be very exciting. If you're more of a conservative investor, like myself, it's something to stay away from, because again, as Randy mentioned, 40% of Bitcoin is held by just 1,000 people. If they dump that, you're talking about a market that could absolutely plummet, and it's a very thinly traded market. So the fact is that any move in Bitcoin, like in any other thinly traded market, the moves can be exaggerated. Yes, we did raise interest rates in the States. Fact is that gold is down $4.30 today at $12.52. It actually did break the $12.50 level on the downside. Did hit $12.45 yesterday. So the fact is that the market is still trading in a range, but the thing to be concerned about is the fact that the U.S. dollar is getting stronger, especially by raising interest rates, and a strong dollar is not good for gold. You know, should push gold lower, which is why we saw gold above 1,300 earlier in the year, and now we're looking at a market that's trading just above 1,250. And again, I do believe that gold is not going to fall out of bid, no matter how strong the U.S. dollar gets, as long as there's geopolitical problems like we have at this particular point. And boy, there are a lot of problems out there. You know, you can't pick up the newspaper or turn on the news without finding out that some powerful guy has exercised his, power and, is now paying the price type of thing. So we live in a totally different world and it's quite concerning as to what the repercussions are. But again, at this point, looking at the commodity markets, the gold market is down because the dollar is stronger. Silver is down 21 cents, trading at 15.94. Oil is actually held in there. Oil right now is trading around the $56 level. It's down 25 cents on the day. But again, most commodities right now are trading within a range. And the reason for that is that the U.S. stock market is on a tear. So the U.S. stock market is trading, at one of its highest levels, and a lot of money continues to pour into the Dow. Now, the fact is that it's not that the economy in the United States is phenomenal. The United States has got its own problems, severe problems. The major problem being the deficit, in the trillions of dollars. And now with this new tax situation that Trump is trying to get passed, it's going to add another $1.5 trillion to the deficit. So eventually they're going to have to deal with that. The fact is the U.S. owes a tremendous amount of money, and as interest rates go higher, the debt on that loan gets higher and higher. So as they're raising interest rates, the fact is that the tremendous amount of money that the U.S. owes at this point, it gets more and more expensive to pay it off. Very similar to what happened in Canada this year when they announced that Canadians held the highest amount of debt ever in Canadian history. And what did the Canadian government do is raise interest rates. And with the real estate market in a little bit of a debacle, they raised interest rates. So again, raising of interest rates, it's supposed to happen when a country is fighting inflation. But the inflation numbers are extremely low. So in all reality, there is no reason to raise major interest rates at this particular point. And it's not that anybody's getting any major return on these rise in interest rates. Basically, you're going to be lucky to get 1% return on your money in the bank. It would take you forever in which to double your money. So at this particular point, there is not a lot of markets out there, not a lot of opportunities that are very safe at this point. It's not like it was back in the day when you could put your money in the bank or in the CD and get 10% and live off of that type of money. Those days are gone. You can't live off of 1% return on your money. There's no way that you can retire unless you've got millions and millions and millions in the bank at 1%. It would basically take you over 70 years to double your money at a 1% interest rate. So again, what it unfortunately does is it leads smaller investors into a market like the stock market, like the Dow, that is too risky for most investors. We've seen massive moves on the upside and downside in the Dow, where most people do feel comfortable trading stocks. The fact is that most stocks are too expensive for the middle class to get involved in. So it's a very difficult investing world at this particular point. I'm not one for trading in the stock market because, again, there's just too much inherent risk there. It's not a safe market to trade. In fact, it's a very volatile and risky market to trade, where most people that trade stocks end up losing their money. 90% of people that trade commodities lose their money. The one market that I am very bullish on is the U.S. dollar. I do believe that the U.S. dollar, as the economy gets better than other economies around the world, especially in Europe, we are going to find that that the U.S. dollar is going to strengthen tremendously. Now, when Trump got in, the U.S. dollar broke par and went to 103. It was on its way to doing extremely well. But then there was a lack of confidence and, problems and, adjustments with the Trump government, and the U.S. dollar dropped from 103 all the way down to 92 cents, actually 91 cents. So it dropped 13 cents within that period of time. And that was substantial. Now the market's back up to around 94.5 in that area. Again, 96.5 is a very heavy and important number for the U.S. dollar. If it breaks 96.5 and closes 2 days above that number, we're looking at the next level for the U.S. dollar is 98 to 99 cents. Again, I do believe that we are going to get back above par, and eventually, the market will break the 103 and possibly get as high as 110. That will unfortunately push other currencies substantially lower. Now, most of my clients are invested in U.S. dollar-based investments because, again, we felt that the U.S. dollar was going to be the strongest currency and the Canadian dollar was going to fall. And that did happen until Trump got involved, and now we're sitting almost in limbo. But again, with the U.S. Economy strengthening, with interest rates going up, that's going to strengthen the U.S. dollar, and other situations coming into fruition, we should see a stronger U.S. dollar moving forward. Again, there are situations out there that we have to be concerned about that could derail the economy, and one of them, is markets that are basically out of our control. And there's certain markets out there that we need to be very, very concerned about that are unregulated, that could really change the whole surface of the marketplace. So again, if you're a speculator, I understand, running into a bull market in stocks, but the general public tends to buy at the wrong time, and they tend to chase markets. And if you're just entering the Dow or the stock market at these levels, that's something I would be truly concerned about, because again, the market has moved up too much without any type of real correction, and that correction has to be coming within the foreseeable near future.
This week we had a lot of information on Bitcoin, and it's in our free weekly newsletter. If you would like to receive our free weekly newsletter, connect with Harold at 1-800-432-1022, 1-800-432-1022, Harold's website, rarecoloreddiamonds.com. rarecoloreddiamonds.com. And one of the things that Janet Yellen said in her last news conference as chair of the U.S. Federal Reserve, she did set her sights on Bitcoin. She said, it's not a stable store of wealth. It's a highly speculative asset, she told reporters on Thursday afternoon. When pressed on macro risk, she delivered this: undoubtedly, there are individuals who could lose a lot of money if Bitcoin were to fall in price, but I really don't see that as creating a full-blown financial stability risk. The cryptocurrency's choppy trading trend continues, swinging between an 8% loss and a 2% gain since about yesterday afternoon as we tape our program. It's interesting to note as well, Michael Novogratz, he's a hedge fund manager. He's going to be starting a cryptocurrency fund, and he said, we are in a speculative mania, and my sense is we are still fairly early. Oh, really? Interesting. Bitcoin is the biggest bubble of our lifetimes, and he obviously plans on taking advantage of it by having a cryptocurrency fund. Also, Clive Mond, we've talked about him when it comes to charting the technical analysis of gold and silver. He came out and said the pattern on the Bitcoin charts has all the hallmarks of a financial terminal blow-off. That will be followed by a catastrophic wipeout, and probably soon. And when that happens, you don't want to be anywhere near it, either that or short. The inexperienced get-rich-quick scheme merchants who have been flocking in droves to Bitcoin in recent weeks will be vaporized. Also, Adam Hamilton coming out and saying, the bottom line is this year's Bitcoin popular speculative mania has gone parabolic. Such extreme gains are never sustainable, as they require exponential growth on capital inflows. Once this greed-drenched bubble stage is reached, it's only a matter of time until the burst inevitably follows. The resulting selling from panic traders is so violent that most of the mania gains are fully annihilated in a matter of months. While Bitcoin and its blockchain distributed ledger technologies are amazing and will indeed likely change the world, they don't justify Bitcoin's extreme vertical gains. Plenty of past bubbles were based on great new technologies too, but those prices still collapsed once the supply of greater fools exhausted itself. After skyrocketing so darn fast, Bitcoin is certainly the riskiest major investment in the world, and Adam Hamilton saying, caveat emptor. Now, here in Canada, a couple of interesting notes. Harold touched on it. We did raise rates in Canada twice this year. In the United States, they raised rates yesterday, and they plan on raising rates 3 more times in 2018. But the median family net worth for Canadians was $295,000.1K. And that's according to Stats Canada. Assets now worth more, but debt loads have tripled. Harold, get a load of this. Tripled since 1999. So that is not something that we want to hear. The median net worth of Canadian families, $295,100 in 2016, a jump of nearly 15% from 4 years ago and almost double since 1999. That's one of the main takeaways from the new Stats Canada report published on Thursday. And the report was called The Survey of Financial Security. Marks the first time since 2012 that the data agency has taken an exhaustive look at the financial lives of Canadians. A person or family's net worth is how much money they would have if all of their assets were sold and their debts were paid off. Now, the lion's share of gains in Canadians' net worth has come from real estate. And StatCan notes housing is both the largest asset and the largest debt. And to give you an idea, Canadian families owed $1.76 trillion at the end of last year, a jump of nearly 25% from 2012's level and nearly 3 times more than was owed in '99, as mentioned. Now, mortgage debt is a major chunk of that. 38.4% of Canadian families reporting that they had some sort of mortgage last year. Canadians held $12 trillion in assets at the end of 2016, and homes made up a third of that value. So yes, here in Canada, Harold, we are getting ahead, but the problem is people are adding massive amounts of debt. And one thing I have always given you credit for when we did our radio show, and now we continue with the podcast, you always said, pay off your debt. That is so critical when it comes to becoming a wealthy individual, not only investing, but paying off your debt.
You bet, Randy. The thing is that, in this world of investing, you have the conservative people like myself, yourself. Then you have people that are speculators, people that take risks and live with the risk and reward scenario. So the fact is that, there's a lot of risk out there, and people are willing to take that risk, whether to try to get rich quick or whatever it is. But the fact is that in most of those cases, people that speculate, 90% of people lose in those situations. So again, not something that I recommend. Much more conservative. I like to pay off everything. I've paid off mortgages and don't owe anything as far as personal debt goes. So the fact is that I may not have the big scores that some investors may get, but I don't get any of the losses. So the fact is that if you just plod along and continue to do your thing and live within your means and save your money, because again, you need to save money at this point because it's very difficult to make any return on investment whatsoever. The days of making money in a bank account or in a CD or that type of thing are over. We'll never see those days again. The days of cheap money are here for a long, long time. So that's not an option anymore. So where does somebody build wealth? And somebody who goes into the stock market at this particular stage where it's at an all-time high, you're susceptible to the market dropping like it did in 2008 when the market dropped from 14,000 to 6,500. It took so long for that market to come back, and there has not been any major correction in the marketplace. So there's got to be one coming. There's no way that a market goes straight up. Eventually, the market's going to outprice itself. Certain stocks have outpriced themselves, and certain stocks are so expensive that most people can't afford it. You can't afford to realistically go in and buy Amazon and Google and those type of companies. They're way too high for most people to put, to buy those type of stocks. So at this point, my suggestion is just to remain conservative. And if you are going to enter the stock market, wait for the correction. Wait for the market to come to you. Don't jump into a market just because you feel that you're missing out on making profits. Now is a very dangerous time to be in the market because the market's at an all-time high. And again, as I mentioned before, the price of stocks are just out of most people's reach. So if you are waiting to get into that market, wait for the market to pull back and make sure that the pullback is substantial. And then if you're comfortable going in at that point, at least your risk level is way down.
Connect with Harold at 1-800-432-1022. If you would like to learn more about investing in hard assets, diamonds, gold, silver, but as well, if you're in a situation where you'd like to pick Harold's brain, he'll be happy to speak with you. Connect with him at rarecoloreddiamonds.com or call 1-800-432-1022. Get our free weekly newsletter, the companion to the podcast. Jack Bogle, he is not optimistic at all about the state of U.S. pensions over the next decade. And this is a very serious concern to everyone who is counting on money that they're putting away right now in a company pension plan, because they may think that they're going to be comfortable down the line, but based on returns, that will not be the case. And in the past, we saw different companies have to cut back the amount of money that they were paying out. Obviously, then a retiree was banking on that money, now having to go out and find a job in their 70s or 80s. Not ideal. Now, Jack Bogle, he was the founder of Vanguard Group. Those are the people that specialize in ETFs. And ETFs, of course, are going bonkers right now. And he thinks a conservative portfolio of bonds will only return about 3% over the next decade, and stocks won't do much better with a 4% annual gain over a similar period. This is totally defeating for pensions, which are not going to be able to meet their 7.5% to 8% obligations, Bogle said in an interview. Bogle is well known for coming up with low-fee funds for individual investors. And this philosophy, and he's fought with his own company, which is amazing. He's very critical of his own company, Vanguard. They've grown into a $4.5 trillion behemoth that will likely reach $10 trillion in assets within the next 10 years if everyone continues to move towards passive investing versus investing individually in stocks. Now, Bogle, he has a self-professed knack for making accurate calls. His prognostications on stocks have been about 81% correlated to what happens, while his bond predictions have been about 95% of the time right. And that's pretty darn good. But Harold, that's something I think people need to be very aware of, is sure, you have to keep an eye on your personal debt and pay that down. But the other thing is really know where your money is, what it's invested in, what the potential returns are, and take as much control as you can, because when you hand control over to other people, that's where things go wrong. And we've seen it time and time again where people lose money. And it's just a shame to hear somebody in their 60s, 70s having to go out and get a job because the pension plan they subscribe to, hoping that it would take care of them for the rest of their life, cannot meet their obligations.
Yeah, that is truly unfortunate. But the fact is that putting away money in retirement savings plans and things like that just really haven't worked out. In fact, most people in Canada that had their money in RRSPs have not made money in over a decade in those. So, the idea behind the retirement savings plan makes sense. Put money away tax-free for the period of time that you're working, and then when it's time to cash in, it's supposedly invested properly in stocks and mutual funds and that type of thing. And then everybody benefits. Number one, supposedly your portfolio is going to be much more substantial, so you're going to have money to retire on. The government's going to do better because the number's bigger and they're going to get paid taxes on that. But unfortunately, it's not working out because nobody's making money in their retirement savings plans. So the government doesn't make their money, and the investors don't make their money. So it's just been a very, very rough ride. The markets have been crazy over the last decade. We've seen huge swings in certain markets, but the bottom line is that with interest rates so low that it's very, very difficult for anybody to retire unless you put away a ton of money.
Connect with Harold at rarecoloreddiamonds.com. Go to his website, rarecoloreddiamonds.com. It's like a museum online for the world's greatest investment diamonds, and those are in the vaults of rarecoloreddiamonds.com. You can see them online, And one of the things that I thought was interesting in the world of diamonds this week, I wished I was going to be down in Los Angeles because I love green diamonds. And they have a green diamond exhibit you need to see. It's the Natural History Museum of Los Angeles, and they have a special green diamond exhibit, and it's throughout the month. It's called Green Diamonds Natural Radiance, a special exhibit that spotlights 60 of the planet's most incredible loose and mounted green diamonds. And if you are going to be down in Los Angeles, it's located in the museum's Gem and Minerals Hall, and the stones are part of what they call the Gamma Collection, which was amassed over 2 decades by David Shara, founder of New York-based firm Optimum Diamonds. But we have in our free weekly newsletter information on what makes a green diamond green and where do they come from. Harold, I know this is something that you've talked about in the past, green diamonds, and we've really brought them forward to those that have listened to our radio show and podcasts as an investment, because we think somewhere down the line, when the pinks are gone, the greens could be that color that really take off, similar to what's happening with blues.
You better believe it. I think it's an amazing thing, because green diamonds turn green because of radiation, because of uranium basically seeping into the ground. They're extremely rare. Very few people have ever seen a green diamond. In fact, earlier this year, or late last year, I think it was earlier this year, is when the Dresden green came up for sale. So you're talking about a diamond that was only 5 carats. It sold for $15 million, $3 million a carat. As these diamonds get more and more rare and people become aware of them, these will be equivalent, in my opinion, to blue diamonds that have skyrocketed in price over the last 10 to 15 years. In my entire experience in the diamond business, I have never seen a class of diamonds go up more than vivid blue diamonds have. And now I think we're going to see the same phenomenon with green diamonds.
If you'd like to learn more about investing in rare colored diamonds, go to Harold's website, rarecoloreddiamonds.com. Get our free weekly newsletter, connect with Harold at 1-800-432-1022, or go to rarecoloreddiamonds.com. One of the things that did come forward this week, Christie's confirmed, and we talked about the Da Vinci painting that sold for actually it was $450 million. Well, it's come out who acquired that painting. And it was actually, well, let's mention that the painting is Leonardo da Vinci's Salvator Mundi. And it's the first statement from the auction house about the acquirer of the work, $450 million. And it actually was picked up by a group out of Saudi Arabia. And they are putting it right now, and they're going to be displaying at the Louvre, Abu Dhabi. And there was a crown prince, bin Salman of Saudi Arabia, that purchased the painting. And we weren't too sure who picked it up for $450 million. Now we know it was a crown prince, Mohammed bin Salman of Saudi Arabia. It's going to be in the Louvre of Abu Dhabi, and that's where it will settle. One of the other things that caught my eye during the week, for owners of a $300 million Bugatti, when they actually have a recall, they come to your house, Harold. They come to your house, they'll take care of it right at your house, or they'll take your vehicle and drive it to the nearest location where they work on Bugattis. But when you talk about service and recalls, that's something that I think the average person is definitely not used to, having them come right to your house. Isn't that cool?
That is very cool. But again, you're talking about a multi-million-dollar car. So it is amazing. I'm just looking up what you just mentioned on the museum going green. But I got to tell you that the diamonds that they're showing, I've got green diamonds that are 10 times as rare as these. They've got a 101 carat vivid yellowish green diamond, a 138 fancy vivid bluish green diamond, and a .54 carat fancy intense green blue diamond. I have diamonds that are green that are far, far rarer than these. In fact, I own a 1 carat flawless green diamond that will be going up for auction this year. hopefully within the next few weeks. And it is the only flawless green diamond that I've ever seen. So we actually put it into a setting with 2 vivid pink diamonds, one on each side, and that will be coming up for auction within the next month. So we're very excited about that, and we'll let you know about it. And we also own a 19-carat green rough diamond, the largest green diamond in the world. So again, I'm glad that they're bringing recognition to the green diamond market, but the diamonds that they're showing don't hold a candle to the green diamonds that my company owns.
RareColoredDiamonds.com is Harold's company. They have some of the world's finest rare colored diamonds in their vaults. You can see them online at RareColoredDiamonds.com, RareColoredDiamonds.com. And Surrey, what's that song? Apple this week agreed to acquire Shazam. And you probably have used those services before on your smartphone where you hear a song, you can't remember what it is. Maybe it's the Mamas and the Papas, Harold. We were talking about it before the show, the Mamas and the Papas, and you just hold up your phone and it will tell you what song it is. And Surrey is going to have a new friend, Shazam, as Apple picked up the I guess you'd call that the app, earlier this week for a large sum of money. But Harold, we will end today's program on a story that I think is probably every Canadian's dream, every hockey fan's dream, really. The St. Louis Blues were in need of a backup goalie on Thursday night after Carter Hutton was hurt during the team's morning skate. Tyler Stewart, a Blues season ticket holder who brings his pads to every game just in case his services are needed, got the call on Thursday afternoon after finishing his shift filling vending machines. Stewart got to warm up with the team, got a jersey for his efforts before heading back to his seats once the Blues' official backup had arrived. And Harold, wouldn't that be a dream come true? I know you love your Toronto Maple Leafs. If they said, Harold Siegel, get in there.
Oh, boy, would I love that. Are you kidding? When I was a kid, Randy, I went to Jim Pappin's hockey school in Pickering, Ontario. I was 12 years old, and I was there for 2 months for the summer, and the 2 junior instructors were Bobby Orr and Brad Park. So I can say that I played hockey with Bobby Orr and Brad Park for 2 months when I was 12 years old. Fast forward about 10 years ago, I just finished playing golf with my wife. We're having lunch. In walks a friend of mine from Toronto, Jeff Rimmer, who was the announcer for the Florida Panthers. I live in Florida here, and who was with him but Bobby Orr. So Jeff comes up to our table and says hello and introduces Bobby Orr to my wife and I. And I looked up at Bobby and I said to him, I'm going to take you back 35 years. And he goes, what are you talking about? I go, Jim Pappin's hockey school in Pickering, Ontario. He goes, oh, my God, I was a junior back then. Well, Bobby Orr sat at our table for an hour and had lunch with us and talked about growing up in Canada as kids and playing hockey. And we all know that Bobby Orr was the greatest defenseman ever to play the game, and the famous picture of his horizontal score, and just an amazing guy. That's one of the highlights of my hockey career.
Well, you talk about that horizontal picture that they scored, I guess it was in overtime against St. Louis to win the Stanley Cup. A friend of mine, and he's a bit of a BSer, said, I met Bobby Orr, and I'm going to send you a copy of that picture of him flying in the air, and Bobby will sign it for you with your name. And I thought, oh, okay. Like, this guy never really comes through at times. Let's just put it this way. And anyway, sure enough, I get in the mail this picture of Bobby Orr flying through the air. It's signed to me. Now, little did I know that I would meet the man who was in goal a number of years later, and his name is Glenn Hall, one of the nicest men that you'll ever meet. He played goal for Chicago and Detroit and the St. Louis Blues. He lives outside of Edmonton here in Spruce Grove. They've named an arena after him. He's in his mid 80s now. I think he's about 85, 86. A friend of mine was just out visiting him the other day. Said to Glenn, Glenn, you're not going to believe this, but I have this photo of Bobby Orr flying through the air, scoring on you. And he said to me, he said, you know what I say to Bobby when I see him? Was that the only goal you ever scored? But anyway, Glenn, long story short, Glenn was nice enough to sign his name on that same picture.
Wow, isn't that something? That's
me.
Fantastic.
And that was through a friend of mine, Byron. But yes, a lot of fun.
Well, Glenn Hall played for he played for the Blackhawks, I think, when Bobby Hull and all those guys were playing. So, yes, I love hockey. We were just talking about it because I was reminiscing. I was at a yoga class last night, and we were talking. They played it was a classic rock yoga class, and they were talking about the Mamas and the Papas. So I had mentioned to the people in the class that I'm 64, but 52 years ago, when I was living in Toronto, the Mamas and the Papas opened up for the Beatles in 1965. And I was actually there at that particular point. So it brought back tremendous memories. And I guess everybody was impressed. Not too many people can actually say they saw the Beatles. So anyways, Randy, it was very, very exciting. A great show. I want to wish everybody a wonderful weekend and a very profitable day.
Yes, good luck to your team, the Patriots, playing the Steelers, my Packers playing the Panthers with Aaron Rodgers back in the fold. And yes, Harold, thank you for your knowledge and another great show. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. Harold's website for auctions, hsfineauctions.com. There's an auction underway if you would like to receive our free weekly newsletter, the companion to the radio show. Speak with Harold, and we'll be happy to send it out to you via email free of charge every week. That's it, another edition of the World Financial Report podcast with Harold Siegel and me, Randy Marshall. We will talk to you next week.